Welcome to this new student video series created by accounting academics at the University of Melbourne.
In these monthly videos, we're going to take a look at the main concepts from VCE Accounting and see why they matter in the real world. The world of accounting is far more complex and exciting than simply accounting for a small trading business. There's an entire world of financing and managing our economy that relies on accounting information. Today, let's look at how the accounting system works in the world of stock markets and why the basic accounting assumptions are so important. Firstly, we have the accounting entity assumption. The companies listed on the Australian Stock Exchange are worth over $2 trillion. Every day, investors, that's professional bankers, stockbrokers, companies, and people like you and me, are trading billions of dollars on the stock exchange to buy and sell shares, which are small portions of ownership in companies. The accounting system allows us to measure how well these companies are performing, giving information to investors so they can make better decisions. The accounting entity assumption here is important to make sure that each company's records are separate, allowing us to assess the performance of each company individually, apart from other companies or company owners. Next, we have the reporting period assumption. So we can compare how different companies perform, companies prepare reports that show their performance over the same period of time. In Australia, most companies report on a yearly basis, with the end of their financial year at June 30. Over the next few months, companies on the stock exchange release their annual reports, providing detailed accounting reports for the previous financial year. Based on this information, investors buy and sell a massive amount of stocks, with over $6 billion worth of shares traded every day at this time of year. Accrual assumption. If investors are going to be throwing around billions of dollars every day based on accounting information, we really need accounting to give us a good measure of company performance. We could just rely on looking at the cash flows of a company, but this doesn't always show us what's really taking place. A company might sell goods to its customers, but not expect to be paid for them until weeks later. Another company might use gas and electricity this month, but not pay for it until next month. Instead of waiting for the cash transaction, accounting recognizes these items as revenues and expenses in the period they actually occur, to let us understand the true events taking place within a business. From here, we're able to calculate profit, which gives us an idea of the wealth a company has generated or lost within a period. Lastly, we have the going concern assumption. Sometimes companies don't perform well. Recently, the retail sector in Australia has been particularly poor. Let's look specifically at the case of Big W. They've recently announced that they plan on closing 30 of their 180 stores around the country. If you're an investor in Big W, you're probably concerned over its future. Even if you might think that the whole company is about to collapse, we still prepare accounting reports assuming that its current stores will continue operating into the future. It would only be when we know for certain that all of Big W's stores are going to close that we would remove the going concern assumption and no longer prepare regular accounting reports. As you can see, accounting and its basic assumptions play a vital role in the world of finance and stock markets, and this is just the beginning. Every month this year, we're going to bring you more videos showing you accounting in action in the real world, so make sure you stay tuned. We'll see you next time.